CBS News financial contributor Mellody Hobson is with us this morning. Good morning,
Good
Mellody.
morning.
So is that the thing, that the economy is doing so well that this fear of inflation is what's got people moving out of the market?
In a word, yes. That's exactly what has happened. The news is good. And as a result of that, there was a great jobs report. Wages are up. And that was a big move, and we've been waiting for that to happen. So everyone says, well, that means profits are going to be down. That also means the Fed is going to want to keep inflation in check, which means higher interest rates. This is not new news. That's the interesting thing. We saw rates go up last year. We expected rates to go up this year.
But the numbers sound so scary, Mellody. Are you here to offer calm and comfort?
Well, certainly. You know that's what I do in these kind of moments. And it's interesting because all the headlines are biggest one-day point drop ever. But in perspective, if you look at that in percentage terms, it's not even in the top 20 because of the base that we started off of at 26,000. And so a bad day was the crash of '87 where the market was down almost 23% in a day. No, that was a bad day. This is to be expected because we've gone since 2008 without even a correction, meaning the stock market being down at least for 10%.
I'm so glad you pointed that out. In fact, I've been doing a lot of reading on this. In fact, the last 18 months have been the least volatile periods for the stock market in modern times. What does it mean, though, for the average investor? Because about a third of Americans have money in the market through their investment accounts.
So what the average investor is going to see is their 401k plan is down. However, this is why I love 401k plans. You put away a little bit of your paycheck every 2 weeks, and you're buying when the market is high, and you're buying when the market is low, and over the long term, you average a better price. If you let the system work, don't change anything that you do, now you're going to be buying more shares. So this works in your favor. The average American during this period should do nothing. You should not be changing your approach. You should allow dollar cost averaging, which is what it is called, to work for you with your 401k.
So you've done lots of reporting. Yeah, what are the largest firms doing right now?
So I talk to institutional investors. I am one. Nothing. They're sticking with their asset allocations. They're sticking with their policies. You don't see big investors making huge changes on one day things going on in the stock market.
But if this continues, when should we start to worry?
I wouldn't be worried for a long time because the underlying fundamentals are so strong, not only in the U.S., but in major markets around the globe.
All right. Mellody, thank you so much.
Always good to see you.
Voice of calm.
Yes.